So happy to have with me today folks from TD Banking. Thanks for joining me, Jennifer, Adam, Andrew. Really excited to finally get you guys out and to hit you guys up with some important questions. So to kick things off, if I can move it to the next slide here, I'm just curious, Adam, if you can tell us a little bit about TD Commercial Bank. What makes the commercial component unique? And you can tell us a little bit about your team as well.
Sure, Jim, thanks for having us. We are essentially the team in Niagara region that looks after commercial financing for businesses. And generally our goalposts are loans anywhere from $500,000 up to about 30 million, in some cases 40 million bucks. So that's what we define as the mid-market. And in terms of geography, our team handles the Niagara region, so all 12 municipalities within the region. We have an office out of downtown St. Catharines, where we service that region from. We've got a team of about 8 people right now, and we're excited about the market and the opportunities that are there, and we're eager to grow. So happy to be here today with you.
No, thanks for that, Adam. I mean, you know, there's always a lot of conversation that goes around between practitioners in terms of, hey, who's funding the deal, which banks have an appetite, and we've heard a lot of good stuff about TD. So I guess this kind of leads into my first question here: is like, how have things changed since COVID? You know, from the business client perspective, and I guess, you know, what have you seen business owners do to adapt? How has TD adapted, I guess, as a result of COVID?
As far as what we've been doing differently, I mean, we've always stayed in pretty close contact with our clients, but we've definitely made more of a concerted effort to really stay in touch with them to understand how COVID's been affecting them, and to see how we can help them and let them know we're here for them. So a lot of the things that we've been doing are offering payment deferrals with basically no questions asked, and in some cases, helping them with temporary operating line increases. We also have the government programs that we've been supporting them with. We have the EDC and BDC co-lending programs, as well as the CBA. And we've also helped customers manage the way they do their banking. So with not being able to leave their houses, and social distancing, we've been setting up a lot of electronic banking so they can do their banking from home or at the office.
That's great. So a lot more convenience, I guess, at the end of the day for business owners so that they can stay safe. How about, I guess, specifically for purchases of businesses and commercial buildings? Has anything changed in that respect? Has the appetite changed at all from TD's perspective?
Yeah, so high level, there's hasn't been a change in terms of our policies or how we look at these types of transactions. You know, as account manager, relationship manager at TD Bank, we try to focus our efforts on, you know, really understanding the business and the industry. That way we can provide, you know, our expertise and the products that kind of fit what that business needs. But everything's, you know, case by case basis. But essentially, there's actually no changes to our appetite or our policies. We're still open for business, happy to do transactions, you know, if everything kind of makes sense in terms of revenue and cash flow standpoint.
Yeah, I would say, you know, that's what we're hearing too from, you know, people who have completed transactions. We've done a few with TD Bank through these times. It's great to see. You know, a lot of people have said, hey, it's business as usual. However, there's a big disclaimer at the bottom, and, you know, you may have to wait an extra 3-4 months to get the deal across the finish line. Like, is there really any impact at the end of the day from pushing it through credit, or there industries that are off the table, or you guys truly just, it's case by case, if it makes sense like it did before, it's still an option?
Yeah, no, so our timelines still remain the same, whether pre-COVID, post-COVID, or during COVID. We take things from start to finish on Adam and my side. We're about a 2-week process. And then, you know, we like to give our Toronto team, if it has to go that far, another week and a half for formal approval, and then security and things like that. So overall, it's about, I would say, anywhere between a 4 to 6 week process from actually starting the deal to fully funding the deal. But in terms of types of industries and things like that, some are more difficult than others, such as hospitalities, restaurants, where there might be some concern in terms of potential second wave. But again, that's us kind of working with the potential business owner, really understanding the business and the approach that they're trying to take, and also the industry that they operate in.
Yeah, Jim, if I could just add something there too.
Yeah.
Andrew, that's a perfect answer. And I would just add that, even before COVID, every business, we're looking at it on a customized basis, right? We're looking at all the different risk factors that we always look at, whether it's industry risk, concentration of customers and suppliers, environmental risk. Now, and the list goes on from there. But now we're just adding another assessment factor, and that's COVID. So on a case-by-case basis, we're looking at the business and going, okay, how is COVID impacting them? To what extent is it impacting them? What's their plan to deal with it? And then we're making an assessment there, just like with anything else.
Yeah, and I mean, it's hard to ignore the fact that COVID has come into the picture and it's going to affect the deal structure. I mean, it's just a reality of where we are, and I think we've been trying to educate buyers and sellers that this is one of those elements that's working its way into the deal, especially when it's really hard to understand what the future looks like if there's a second wave of COVID and this sort of thing. So I don't know if you guys have seen this, but we're seeing earnouts come back to the table a little bit more frequently. We're trying to incorporate different parameters so that the price perhaps is adjusted after 12 months if the business falls apart. We're trying to get a little bit more creative to really mitigate the risk on the buy side and I guess on the banker side, but also protect the seller and ensure that we can still get buyers to the table. Are you guys seeing, I guess, more creativity in deal structures, or has it been pretty, standard?
I would say it's been fairly standard, but you're right. I mean, that's a good way to handle the quote unquote unknown of COVID is with earnouts, various things like that we can put into deals, and we are seeing more of that. So no, that's it's a great way to handle it.
I have seen an example where there's a VTB in place, and what they're structuring now is essentially a percentage of that EBITDA will then flow to that VTB. So instead of it being strictly principal and interest payments at the beginning, they're moving towards a more structured, just to make up a number, 20% of EBITDA will then flow to that VTB. Just so to your point, the seller is still being able to collect on that VTB as well throughout the process.
Yeah, and that's the thing, right? Is you've got buyers and sellers with different appetites, so there's more creativity now. Are there any industries or types of deals that have become quite interesting or attractive from TD's perspective?
So as long as it's a well-managed company that's profitable, I mean, we'd be willing to take a look at financing anything. I mean, the important part is the management. So I wouldn't say there's anything industry specific that we'd prefer to do over the other. As Andrew mentioned, hospitality is tough these days, but other than that, we're pretty much open to looking at anything.
I was just curious, for sellers out there and even buyers, if the business is completely shut down right now due to COVID, is it still possible to get financing if, there's some level of assurance that the business will come back to life, but it's just been closed due to the pandemic?
Yes. Again, we're looking at that on a case-by-case basis. I would say there'd have to be a pretty understandable way back to work for the business, if you know what I mean. we'd want to understand the plan and what potential roadblocks are in place there to get the business back. And then we'd probably have some sort of mechanism that says, hey, got to be operational for X period of time before we'd fund the loan. So we're actually working on a couple deals just like that right now, where we're putting credit approvals in place now in advance so that the owners of the businesses have certainty in regards to the financing. And then, we are putting that condition in there to ensure that the business is backing up and running before we fund the loan.
Another question that relates to this is, if you're a buyer or seller, what are you looking at to ensure that maybe you have a deal in process? What can they look at to ensure that financing is still feasible? You guys have any tips for folks on that regard?
Yeah, so I would say, the way we kind of look at these types of transactions, always kind of top down approach and look at in terms of who the key personnel is within the business. Are they going to be staying on? Is there anything that needs to be done differently to keep your key personnel? I would also say, if I was looking at the transaction at this point in time, understanding who their key customers are and key suppliers, how has COVID impacted them, if any? Are they still open, or are there still kind of viable, business relationships at that point? And then just strictly, what does the VTB look like? Is there, non-competition? The longer a seller can stay on and support and provide, advice, is beneficial on both, the seller side, because then they're still obviously ensuring that the VTB gets paid, but then also from the buyer side, especially during COVID times.
Those are good points, Andrew, because I think, you've addressed the next question around how you guys are integrating the COVID piece into the evaluation of the companies. And I think, evaluating what the customers are experiencing as a result of COVID is really the next layer. I mean, if the company is surviving right now, but some of their clients are on the verge of collapse, that's obviously going to impact the business, right? And maybe it just hasn't happened yet, or maybe you look through the lens of a second wave. And we're seeing buyers do that level of due diligence now, where they're trying to assess whether or not their customers in an area where there is significant cases, especially manufacturing, where they've got customers in the States, some of the more heavily populated areas where there is more COVID. And I guess that is a consideration now, where you got to look at not only the business you're looking to purchase, but you got to look at their suppliers, you got to look at their customers, and that sort of thing.
For sure, especially, we do have a focus on cash flow lending as well, where you're hoping, you do it based off of a steady state of revenue or steady state of cash flow or EBITDA. So that's where you want to make sure, your main suppliers and your customer base as a whole will still be there, 4 months, 6 months, a year down the road type of thing.
Right. And I imagine it's got to be a tough exercise, though. I mean, there's only so much of due diligence you can do in that regard, right? It's not like, you can issue a report and say, can you fill out this questionnaire that says, how impacted are you by COVID, right?
Mm-hmm. For sure, yeah. And it's not, to your point, we're not going to get, obviously, the financial statements of their customers either, right? But then it also goes back to Jen's point on the character of who's buying the business and who's selling the business to, right? And, making sure that we trust and believe that they can, succeed and whatnot is one of those points where you can't exactly put on a piece of paper as a figure, but definitely provide some qualitative perspective on the deals.
Right. And I guess if you're the seller, you're probably looking through that lens too, where if there's a VTB on the table, I know it's one of the most disputed conversations we typically have in the transaction is the VTB, will it be paid? And what we usually say too is look at the quality of the buyer. And I know, from a banking perspective, you guys are trying to look at the quality of buyer. If things go awry, do they have the ability to bring things back? Do they have some other collateral they can bring into the mix? I guess those are all important pieces that sellers should be looking for too, with respect to the buyers coming to the table, because it's no longer just the price tag they're putting on, where it's no longer the amount they're bringing to the table, but how are they going to secure that VTB at the end of it?
One other thing I wanted to add to that point, what they can be doing to look to assess whether their active deals remain viable. I mean, in the stage where they're looking at a business, we are, as a team, happy to provide advice at that stage rather than waiting for the deal to be fully negotiated before we enter the picture. That's a time when we'd be more than happy to provide our input in terms of how TD would look at the deal and provide, sort of customized feedback for that particular deal and that particular industry.
Yeah, and I can appreciate that personally. I mean, typically before we'll engage a client, we're looking to the bank to see what the bank's appetite is and how they like to see the deal structure. The reality is, in the lower mid-market that we operate, financing is really everything. It is the linchpin. So it's not worth going to the finish line and then finding out that what the buyer put on the table can't be achieved because it's not realistic in terms of financing. So no, I appreciate that, Ab, and I think it is a good best practice if you're a seller or even a buyer to understand what the financing capabilities are.
Yeah, because at the end of the day, we can help, finalize that structure with you guys as well. There might be one particular thing that we might see as a roadblock, and it's better to know that early rather than later. And there might be something where we can say, yeah, you might be able to, do this a bit differently to your advantage kind of thing. So, happy to be part of the deal discussion as early as you want us to be.
One more, I guess, detailed question about this is with respect to personal guarantees. Are you guys seeing more and more personal guarantees put out there to protect the VTB? It's another contentious issue we have, and just curious what you guys are seeing.
To be clear, you're talking about a personal guarantee from the buyer or the seller?
From the buyer to protect the vendor take back. Yeah.
I would say we have, again, a customized approach to each deal. We always want to see personal guarantees. Well, not always, but in most cases, we want to see personal guarantees from the buyer. For our portion, we don't often see it for the VTB portion. Generally speaking, we're looking for substantial guarantees in the picture, more so to ensure we're comfortable knowing that that buyer is aligned with us and is comfortable, just as comfortable with the deal as we are, if that makes sense.
Yeah. So, I mean, you guys want to make sure the VTB is structured in a way that it can reasonably be repaid. Oftentimes it aligns with the term of the loan that you guys are putting out there, that sort of thing.
Yep. It depends. It depends on the debt serviceability of the business as well. Sometimes the VTB waits until we're paid out. Sometimes they can be paid concurrently. But that's something we look at on each deal, depending on the cash flow and the loan to value and the various factors involved.
Right. Do you guys have any examples of transactions that have recently closed during COVID?
It's a mortgage for an existing customer. He decided to buy the building during this. He was pretty nervous because he didn't know if we would be doing financing, but I assured him it would go through really easily. The appraisal came in for something that was reasonable. We financed 75%, went through without a hitch. So that customer was really happy that we were able to do it so easily.
I would just add on, we were able to get financing on an insurance company, and probably about 80% of it was cash flow lending. So we did about $6 million, and 4.5 of it was actually cash flow lending. So we were able to structure a deal that was a little bit more competitive than what his current financial institution was providing him. So we did the takeout of the other FI, and we also did a little bit of an equity strip. He was one of those people that heavily invested in the market and felt that, he had strong cash flows, and he wanted to take a little bit of out and figured I could pay the bank 2.5% interest and go make 5% interest return on the market, right? So we did a little bit of an equity takeout there, and we also, to Jen's point, we were able to provide financing on a building acquisition for him as well at 75% loan to value, 25 years. So that one actually started kind of pre-COVID, and then COVID kind of happened, and I had a conversation with him and let him know, there's nothing to be worried about. We'll still structure the deal exactly how it was on the original term sheet that was presented to you. And that's exactly what we got approved in April from Toronto, without any issues on our end either.
Oh, that's great. Both good stories at the end of the day. You guys think that, in the short and long term, there's going to be changes in the way lending is done, whether it's the number of players in the market or the checks and balances, due diligence, and that sort of thing?
Yeah, that's a good question. Time will tell in terms of how lending looks in the future. I know I can only speak for TD when I can say that we want to be there for our customers through this. The approach has clearly been, from my perspective, a willingness to support, knowing that this is a pandemic that's come into play that nobody predicted. And so, as Jen mentioned earlier, our first reaction was to provide a large majority of our clients with principal deferrals on their term loans, additional working capital support with temporary operating line increases and such. I would go back to 2008 during the financial crisis. TD was actually, commercial banking group was 5th in market share to call it 5 big banks in Canada. And since then we've grown to close second. Back then we stuck with our customers and we actually lent into that environment, and that's what allowed us to grow. And we want to do the same here. I mean, we're taking the long view. We're going to do deals where it makes sense, and we're going to stick by our customers to the greatest extent possible. So sort of a long-winded answer to your question, but that's our perspective.
So at the end of the day, the middle market is a space that TD likes to play in, and you guys aren't letting off the gas because of the COVID. As long as it makes sense at the end of the day, you're still got the appetite.
Yeah, in fact, we have a big appetite. There's a big focus on us being out in the market. It's tough when you can't visit people physically, but we want to be out there seeing our customers as to the greatest extent possible using WebEx, video conferencing. Hopefully we're able to go and see people in person soon, but we want to be out there. We want to be in the Niagara market, and we're eager to grow and to get TD's capital out there in the market.
I can appreciate that, and I appreciate you guys coming online. What's the best way for people to get a hold of you if they have some questions?
Email or phone's fine. Yeah, both work equally well.
You wonder too if in the near future everyone's going to have a Zoom address of some kind, or kind of an opportunity to book directly through Zoom, because I feel like I'm on Zoom like every other meeting.